Welcome guys to a new video. I have decided to make a new series about how to identify higher time frame PD arrays, and the reason why I'm doing this is because when I shared with you guys my strategy right here, you can go back to my channel and check it out. I have shared a lot of videos about it. So when I shared this strategy and this checklist right here, I got a ton of DMs every single day talking about this second condition, which is the higher time frame PD array rejection. So basically, the questions were how you can identify this higher time frame PD arrays, what are their types, and what is the easiest way to see them printing live. So I have decided to start this series to talk about this higher time frame PD arrays, and this is basically the list. You can see that there is old high, rejection block, a bearish order block, fair value gap, liquidity void, a breaker, and mitigation block. So this is the premium. This is called the PD array matrix, premium discount array matrix. Basically, when we have an expansion leg, when you like here, when you take a fib from here to here, anything above the 50% is called premium. So the PD arrays there are called premium PD arrays, and below them are called discount PD arrays. So starting the series with order blocks. So I'm going to share with you guys in this video how to identify higher time frame, high probability order blocks, A+ order blocks. I'm going to give you a checklist so you can, whenever you want to identify an order block, you can pull it out and see if that order block on the screen meets the criteria on the checklist. So without any further ado, let's just get started. So guys, in this lesson, I'm going to approach it with learn by doing, meaning I'm going to show you examples, and I'm going to explain what a higher probability order block looks like live on the examples. So no theory in this lesson. So starting with the first example, and this is US dollar and Canadian dollar, the 1 week chart. This is the weekly chart. So an order block is the last up candle before the big move and expansion move to the downside, like here. You can see this candle right here represents an order block. I'm going to tell you exactly why this order block is a high probability. You can see, so this move, we can see this is an up candle right here, up close candle, and we have an expansion to the downside. So what makes an order block high probability? The first thing is forming on a key level. That's the first thing, the first condition, forming on a key level. Another factor that makes it high probability is taking liquidity before. So you can see that move right here, this candle took liquidity and then expanded to the downside. So the second factor is taking liquidity. The third factor is leaving a fair value gap. So after forming an order block, we have a fair value gap right here. So you can see that price retraced to this. So you can see that price retraced to this fair value gap right here, hitting this order block and then continued lower. Now, keep in mind these three factors: forming on a key level, taking buy side liquidity or sell side liquidity, and a fair value gap. Now let's go to the 4-hour chart. So this big rectangle right here is the weekly order block. Now when we go to the 4-hour chart, you can see that there is another order block forming right here, and the first factor is forming on a key level. On key level is the order block on the weekly chart. So this is the key level. The second factor is taking liquidity. You can see that this candle right here took buy side liquidity from here, and the second factor is fair value gap, leaving a fair value gap on that expansion lower. So this is a high probability order block. This is an A+ order block. You can take this example right here and look on your chart for order blocks like this. You can see there is another order block right here, taking liquidity from here, we don't have that fair value gap right here. That's all right, but we have the first factor, which is forming on a key level, which is this order block right here. The key level can be an order block, it can be a fair value gap, it can be a breaker block, it can be anything. All right, moving on to another example. So down close candles on a buy program can be also considered as order blocks. So you can see that this candles right here forming, took liquidity from here, forming on a key level, which is this fair value gap right here, expansion higher, leaving a fair value gap. So keep in mind these three factors, guys. Retracing lower, retracing to that fair order block, and then keep moving up. Another A plus order block right here. We have taken liquidity from here, expansion lower, leaving a fair value gap, price retrace to it, hitting that order block perfectly, and then continue lower, retracing to here, hitting one more time, taking liquidity from here, leaving this another order block right here. So after trading lower on this candle, this can be another order block, taking liquidity, forming on a key level, which is this order block right here. And you can see that there's the fair value gap right here, and then retracing lower. Another example right here, we have this down close candle before the move, the expansion higher, forming on a key level, which is this fair value gap right here, the first factor. The second factor taking liquidity from here, and the third factor is leaving a fair value gap here. Price, we are on a buy program, so price retrace on that order block and continue higher. We have another order block right here. So this candles right here, this candles represents an order block. All right, why? First of all, forming on a key level. Key level is this order block right here. We don't have the second factor, which is liquidity. That's all right. And the third factor, which is leaving a fair value gap, and you can see that price retraces this order block and continue higher. Another here, right here, another order block right here. The same, taking liquidity, forming on a key level, this fair value gap right here, and leaving a fair value gap on that expansion. Price retraces that order block and then continue. I'm gonna show you another example. So this is here. So this is another example right here. This is US dollar against the Canadian dollar, the 15-minute chart. We have this candle right here taking liquidity from here, forming on a key level, which is this fair value gap right here, and expansion lower, leaving a fair value gap, price attached to it, and then continue lower. We have another one right here. This is the Australian dollar against the US dollar, the daily chart. So this candle right here took liquidity from here, expansion, forming on a key level, which is this order block right here. All right. A price retrace the order block, touch it, and continue higher. We have another order block right here, forming on a key level, taking liquidity here. The key level is this fair value gap right here. Expansion, we have two factors met on this example, retracing to it and then continuing. Another order block right here, forming on a key level, which is this order block right here, taking liquidity, leaving a fair value gap, price adjust to it, and then reaching for this higher time frame objective, an alt high. And then we have smart money reversal, an order block right here, taking liquidity, forming on a higher time frame on a key level, which is this fair value gap, and then price retracing to it. We have another yet another example. This is the Dixie. So we have this candle right here taking liquidity, all right, forming on a key level, which is this fair value gap, leaving a fair on the expansion lower, leaving a fair value gap, another fair value gap right here. So the two factors are met, guys. You don't have to met all the three factors. you can met 2. So 2 is acceptable, 3 is A plus. Price editors do that order block later on, and then moving lower. So I guess I ran out of examples. Now, what I want you to do, guys, is to collect examples by yourself. So based on what I have showed you, I want you to go to your chart and collect as many examples as you can. After I showed you order blocks, the next thing I'm going to show you another type of a PDRA, which is breakers, how you can identify them and what makes a breaker a high probability. So stay tuned for the next video.